Welcome back. You're watching Stock Picks. Today we unpack Anglo American, BHP and Sasol with Greg Katzenellenbogen from Sanlam Private Wealth. Greg, a pleasure. Good afternoon to you.
Good afternoon.
Wonderful, Greg. I'm keen to maybe start off with Sasol and chat about this company. Is there a reason why you've chosen this stock this afternoon?
Well, one of the reasons I've chosen it is that it's been in a steady, the share price has been in a steady downward movement for some time now, and the share's really been under the whip. And I personally think that it's overdone, and I think that it offers good value. There's a lot of, I can understand the reasons why the Sasol share price has been down. There's worries about carbon taxes coming maybe in the future. The fact that their Secunda plant is the world's biggest emitter of emissions. But Sasol said they have a plan by 2030 odd to be 30% compliant with emissions and net zero by 2050. But a lot of people probably don't quite believe that. The other thing that Sasol has also struggled with is, they've had to lower production volumes because they've had some problems at the plant. But underlying this all is that chemical prices actually have been recovering globally. The oil prices held up pretty well. For a $1 per barrel difference, that could translate to either up or down 800 million on Sasol's bottom line. If you also have a $1 movement in the refining crack, refining cracks is really the cost of their raw material, crude oil, and what they can sell the products they make from it or they refine from it. And a $1 movement in that refining margin could also lead to about 800 million up or down. So generally speaking, the oil price has been steady around the above $80. If it moves up closer to 90, it will be very beneficial for Sasol at the moment, unless there's some resolution to the war in Ukraine. It's unlikely that oil price will fall out of bed, although but stability is what you want, and so the average annual oil price will be important for Sasol, but also oil prices are recovering. And I think Sasol also, there's potential for some corporate action in the stock as well. It might in the future be beneficial for Sasol to split their offshore assets into a separate company and keep the South African assets in a separate company, and that could be beneficial. But at this rate, the Sasol price has spent the last year in a downward trend, and you need, at their new next results, if things improve, this could be an opportunity for the stock.
What we also know about Sasol, Greg, is new leadership there, a new CEO and new CFO. And I'm wondering how markets receive this as, a fresh blood. It could be new ideas, new potential for the business. Or if we're still waiting to see how that might pan out, and that could be priced in a later stage.
Well, I think when the announcement came that the CFO was leaving, the market didn't take it well, and the share price declined further. So it's never a good idea, for stability when that happens. But he saw an opportunity elsewhere with a Canadian company, and so obviously took it. But I think that, hopefully that on the HR front, things have settled now at Sasol. So I think that any new person who comes in will quickly build a rapport with the investing community. And so that shouldn't be a worry in the future.
Another interesting one, I think, for this one, Greg, before we move on, is the issue of its balance sheet. Of course, you have mentioned that they've got those plans to decarbonize by, a certain percentage, I think by 2030 there. That might require quite a bit of, leverage. And do they have that on their balance sheet? Is it something that they could raise in the future?
Well, they have, I mean, the balance sheet is a lot better than it was when they had all the trouble with the Lake Charles business before they sold 50% to a French company. But that is a concern for the market that they'll need to spend capital on on achieving a reduction of emissions. So they do, but they have repaid quite a lot of their debt. So we don't want to see the debt levels. But I think that if the cash flow improves for it, they'll be easily able to afford it.
Moving on, Greg, I want to speak about BHP and Anglo. So I'm wondering if you want to speak about them separately and then together, because of course it's very hard to speak of one without speaking of the the other lately.
Well, look, let's talk about Anglo
Yeah.
first. So they rejected the third bid from BHP and didn't give them any further extension and time to talk before the deadline ran out. So BHP now can only come back in 6 months. They can't come back earlier than that, unless, of course, somebody else makes a bid for Anglos, and that then they can come back with another bid. But to BHP have been, they've told the market that they won't overpay and they will adhere to capital discipline, and that's what they seem to have done. I think that Anglo had some of their concerns about the unbundling of Kumba and Anglo American Platinum. I think were valid because many of these holders of Anglo who would have received these shares and that reside offshore might not have wanted to keep the Amplats or the Kumba, and they would have just dumped the shares, and that would be negative for for Anglo shareholders. Although, what concerns me is that Anglo, in their defence, rushed out their own plan, and that seems to me has been put together quite hastily. The last time Anglo wanted to reorganize, they were going to sell Kumba, and just at the bottom when the iron ore price recovered. And now, they didn't do that. And of course, Kumba's gone on to generate huge amount of capital, dividends for them. And I think that would be, at the same thing with Anglo Platinum, with unbundling at a low in the platinum price. These stories of writing off platinum and palladium for the future, I think I don't agree with that. I think it still has a future. And then De Beers also, in De Beers, they want to, either sell or get rid of or give to the shareholders or relist it. And that's the other problem. I think they've put together this plan as quite quickly in order to see off BHP Billiton, but I don't know how well thought out it has been. Diamonds is a cyclical business and it always has ups and downs, and the diamond price will recover in the future. So let's see what Anglo's does in terms of their plan to unlock value, but I hope it doesn't destroy some of the value. I think, their metallurgical coal mines they want to sell in Australia, maybe they sell them to BHP Billiton, but it's all about copper, and for BHP, Anglo would have been a nice to have. It wasn't a must have. But it certainly would have helped them because, these copper mines can take many years to bring on, 20, 30 years before you start production. So that's why those Anglo copper mines very attractive to BHP. But let's see if anyone else comes with another bid for that. I think you'll be hearing a lot about Anglo in the future, whether it's a bid from another company or whether BHP comes back at it again. The good thing about Anglo is that they would, slow down capital spending on their potash operation in the UK, and I think that's the market likes that because it was starting to take up a lot of capital, and they say they will look for a partner for that, and I think that's the best thing for it. So we haven't heard the last. I think BHP would have liked to have Anglos. I'm surprised that they insisted that Kumba and Anglo Plats had to be unbundled before they would do anything. I think that they could have, if they had taken over the company, they could easily maybe attracted a Chinese buyer for Kumba. Chinese always looking for iron ore, and platinum will come through this downward cycle in the future.
Greg, what actually was, and I'm glad you speak about platinum because what was, I think, the one thing in common that BHP's proposal and Anglo's asset review had in common was issues of platinum mining here. And as you're saying that this cycle could obviously change as commodity cycles often do there. But we are seeing the whole world maybe bearish on platinum there. Other fund managers even speaking about doing away with their platinum assets there. Is platinum also one of those commodities that's overdone and also just getting the raw end of a deal?
Yeah, I think so. I don't buy that story that it's the end of platinum as we know it. I think the world was told that it will only be electric vehicles in the future and you don't require platinum or palladium for that. And then what has happened, the world is awash with electric vehicles that they can't sell. And also, we haven't been able to roll out enough electricity. I've never believed that it will either be electric vehicles and nothing else. I always believed that hybrid vehicles will make up a very big part of this mix in the future, and vehicles, trucks, and that with green hydrogen and all these things that you still require some platinum for it. So I don't buy the story that it's the end for platinum and it will never recover.
Another interesting one, part of this deal, Greg, and it's an important one to also consider here, is Anglo American's relationship with South Africa. It literally goes back a century. It is an important relationship. The role that Anglo does play here in the country as a corporate citizen, but I guess also just, as a mining house. And no matter what they try to do with the assets here, it wouldn't be an easy exit, would it?
It wouldn't be an easy exit, and for me, it would be personally a tragedy if Anglo's was no longer listed on the Johannesburg Stock Exchange. I think, as you said, this company goes back more than 100 years. It has an indelible history entwined with South Africa. But, nothing lasts forever, and the things do come to an end. We've seen over the last 20, 30 years, many companies, stalwarts, De Beers itself, and many of the gold mines, and that they are no longer listed on the stock exchange. But Anglo does have a very, and is generally under tough conditions, has had a pretty good relationship, I think, with the government, and they wouldn't want to jeopardize that. But BHP put out a statement saying that they had addressed what they felt would be South Africa's concerns, and they were going to put money into, assisting local companies and local people in the mining. So, but yes, it won't be easy to untangle Anglo from South Africa, but unfortunately the world doesn't what we want, we don't always get. And I think at the end of the day, I see Anglo's either reduced dramatically in South Africa and certainly will be smaller than it is in the future, because I do believe that at some stage it doesn't mean that BHP can't come back now. But if Anglo's goes ahead with what they want to do and unbundle De Beers and unbundle Anglo Platinum and unbundle Kumba to the shareholders, they'll be really left with what is attractive to a foreign buyer anyhow. So I think that Anglo eventually will be bought out in the future, but just at a higher price than BHP was probably offering.
Also, the interesting, it was a rumor mill, nothing's come out of it. Glencore possibly pondering on Anglo's there. Could Glencore be a better, partner for the Anglo American? Maybe even from how it would view these assets, considering what's happening with Glencore itself?
Yeah, I don't know if there would be a better partner. I mean, BHP is a massive mining operation. So Glencore, in one of the copper mines in South America, Anglo is a partner with both Glencore and the Chilean government in a copper mine there, and a company called Teck Resources. So I think that, they do have some sort of tie-up with Glencore, but it's possible that Glencore will come for it. But Glencore has just, been busy with taking some of the assets off Teck Resources anyhow. So I don't know whether they could get the firepower together and borrow money. But investors at the moment are not willing to see mining companies saddle themselves with huge debt. I think it's different this time because we are probably at the bottom of the resources cycle, whereas in the past, in 2008, we were at the top when everyone was spending like there was no tomorrow. So Glencore could be a possible tie-up with them, but then so could Rio Tinto, and there's a number of others, and there are Chinese companies as well that would like to get more into the mining space. So I think that we haven't heard the end of the story yet. Anglo, I think, will have a suitor. We just don't know yet which one it will be.
And with that said, Greg, from a retail investor perspective, is there a case for at this point to go in on BHP or Anglo's shares?
Well, I think, look, the market liked the fact that BHP is not overcommitting themselves, so the BHP price is up today, and taken a well, and Anglo share price is down. But I think that BHP still remains a very big operator in the copper space. Also in iron ore, if things improve in China, that should be beneficial for them. So I think that, BHP at these levels also, most of the mining companies offer attractive returns. It's just at the moment the backdrop for the markets is not so great at the moment because worries about interest rates in America. At the beginning of the year, you were told 4 or even 5 interest rate cuts this year. In America, there might actually not even be one. So that spooked the market. The fact is that also the American government, Treasury, is issuing a huge number of bonds, and at the bond auction yesterday, it was quite weak, that auction. So the market took fright at that as well. So the background at the moment is a little bit volatile, but I think at these levels, or if you're a little bit patient, you can pick up BHP, even Anglo lower down. But I think that on a 2-year horizon, that would prove to be a good move.
Well, Greg, it's all we have time for today. Thank you so much for joining us and for unpacking this one for us. It's been an absolute pleasure. That was Greg Katzenellenbogen from Sanlam Private Wealth.